Let's bring in Tammy Trenta, founder and CEO of Family Financial. Tammy, welcome back to the show. Let's talk some energy picks. You've got one on your list, ticker AVA, a natty gas producer. How come it's not making highs while natty gas is breaking out?
Well, I'm not sure, but in 2002, it did not see a big share price run, so I think it's fairly valued.
AVA has been up on the year, but marginally in a world where energy companies are leading the way. Walk me through kind of where they sit on the energy complex and where they get their revenues from.
Well, they have a growing and stable customer base in the Northwest. They have negotiated rate increases with 3 out of their 4 largest markets, and so that provides stability for their 4% dividend.
Okay, so this is the utility side. This is the distributor. So I guess the comparison to the commodity isn't quite fair. This is a company bringing you the power after someone else has found it.
Yeah, I mean, we see it as an inflation hedge. We also like it because 8 of their 15 electrical plants are hydrogenating. Their goal is to be carbon neutral in the next 10 years. That's one of the higher rated utilities for ESG investing.
Are you a believer that the utility trade is the dividend heavy inflation hedge? I hear people generally kind of expect this group as a whole broadly to outperform in the environment we're in.
Oh, well, it already has. And I think it's a nice complement to the growth stocks that have been so depressed year to date. So we're adding value to the portfolio, and we like the dividend paying stocks right now throughout the rest of this year.
One of the companies you like is Verizon. And the dividend from the telecoms oftentimes kind of loops them into that low volatility category. But there's quite a bit of competition in the wireless space right now.
Yeah, there's a lot of competition in the consumer markets. We like Verizon because it's got a fairly low PE relative to the rest of the telecommunications industry. As we know, they're a leader in 5G technology. They're the best in customer service. But what they've been focused on is expanding into the business customer base. And that's really helped them maintain their high profit margins. We think that they run their business efficiently. They have net income over $1 billion. I wouldn't be surprised if they look at some of the growth stocks that are depressed, that leverage for a strategic acquisition at some point.
Verizon's had a pretty strong bounce back, but got slammed pretty hard on the last earnings. AT&T has been bouncing back too. It seems like the Sprint T-Mobile combo, though, is the winner in the group right now, doing pretty well on the year. But I guess it's kind of a different mentality. Do you go for kind of the growth market capture potential for T-Mobile or the steadiness of the dividend? It sounds like you're more in the latter camp at this point.
Yeah, we like the dividend. We also like the upside of the business segment of the market. I think if they can create a strong business customer base, then they can create value added products to sell to that business base, which is where they make the majority of their profit.
Okay. So within the realm of dividends on the real estate side, LTC Properties is the pick you like. Tell us about the stock.
We like LTC Properties. As you know, real estate has been a very robust area of the market in the last year. What LTC focuses on is senior housing and healthcare properties. So it really is in line with an aging baby boomer population. We know that people are living longer. A lot of the baby boomers historically have liked to stay at home, but we see that changing for a few reasons. One is that we have labor shortages, so it's harder to get help at your home, especially with COVID. We have more of a remote workforce, so families are more spread out. And it could be an opportunity for these seniors to sell their home at a profit and transition to one of these housing properties.
Okay, so the dividend play is the way to go. LTC looks like the best stock performer at the moment, too. And then on the tech side, we got one more for us, Tammy. Good old IBM.
Yeah, so IBM is sort of our tech value play. You know, it hasn't had a great 10-year history, but with the change of regime at a PE of 23, we think it's fairly valued. It's got a strong dividend at 4.7. You know, they've made 5 acquisitions in the last year. One of their key acquisitions was Red Hat, which represents 35% of their revenue. The CEO is very focused on top line growth. They're a world leader in quantum computers. We think they're a little bit more recession resistant because they service large, stable industries such as healthcare, finance, government. And, you know, with the Watson tool and artificial intelligence, they are poised to apply that into other industries.
Hey, they're doing a lot better than the tech sector on the year, so maybe the comeback time is here for IBM. Tammy, thanks for the stock picks.
Thanks, Oliver. Have a great day.
All right, you too. Tammy Trenta is founder and CEO of Family Financial, hunting for dividends across sectors.